Welcome everyone. In this video, we are going to analyze, will those who hold XCN coin win big? Don't forget to subscribe, and please watch to the end to understand. When we take a general look at the chart, the most striking structure is clearly the descending trend line that stands out prominently. This descending trend has suppressed price movements for a long time and has effectively acted as a resistance wall. Although the price has attempted upward moves from time to time, it has faced selling pressure each time it touched this trend line, resulting in pullbacks. In other words, this trend line has become a key resistance level that investors are closely watching. Especially when we examine the price's reactions to this trend line, we can see that there have been several serious attempts to break it. And in some cases, even though the price came very close, it failed due to insufficient buying power. This clearly shows how seriously the market is treating this area and how technically strong this resistance level is. In the current scenario, the price is once again approaching this descending trend line, seemingly preparing for another breakout attempt. If the price can break above this trend line with strong volume this time, according to technical analysis principles, such a breakout could generate significant momentum. Typically, breakouts from long-standing descending trends represent the overcoming of major psychological barriers and are followed by sharp and strong price movements. A trend line that has been tested multiple times without breaking not only confirms its strength as a resistance, but once broken, it often flips to become a strong support level. That means after the trend line is broken, the former resistance becomes a base for the price and can support a healthier upward trend during any potential pullbacks. However, what's important in descending trend line breakouts is not just crossing the trend line, but doing so with strong trading volume. In other words, it's not enough for the price to simply cross a line. There must also be a noticeable increase in volume to confirm that buyers are stepping in strongly. Otherwise, breakouts with low volume often turn out to be false breakouts, with the price pulling back below the trend line again. That's why volume confirmation is a crucial factor in such scenarios. The current setup may present a significant opportunity for patient investors. If the price, which has been under pressure for a long time, finally breaks free, upward movements could unfold quickly and across a broader range. In technical analysis, it's common to see high volatility after a breakout from a long period of consolidation. So, the breakout may not just lead to a minor increase, but could potentially trigger a substantial upward trend. Moreover, such trend line breakouts usually result in significant shifts not only technically, but also in market sentiment. When a descending trend line is broken, investor confidence often rises, the fear of decline in the market dissipates, and new buyers tend to enter more aggressively. This sets the stage for an uptrend that can last not just days, but weeks or even months. Looking at past charts, we can see how powerful and impressive the price movements can be following such critical trendline breakouts. Therefore, the descending trend structure and the potential breakout we are now facing should be considered a very important development for long-term investors. In conclusion, the price is currently being tested by a strong descending trend line. Although previous attempts have failed to break above it, each new attempt appears more promising than the last. If the price manages to break above this trend line with strong volume, the resulting scenario could be a major upward move. But it's important to remember that we shouldn't rely solely on trend lines. Other metrics must also be considered to ensure a complete analysis. Stay tuned. When we carefully examine the chart within the framework of the Elliott wave theory, we can clearly observe a slight adjustment in the position of the second wave. Compared to our previous count, the second wave has made a deeper correction, moving slightly lower. Such corrections are quite common, especially in highly volatile markets. And due to the nature of wave structures, the price is allowed to dip a bit further. However, the most critical threshold we need to closely monitor here is the starting point of the Elliott wave structure. At the moment, we can see that the price has not yet fallen below this starting level. This indicates that our current wave count still remains valid. However, in the case of downward pressure, if the price does fall below this Elliott starting level, then the current wave structure will technically be invalidated, and we will have to recount the waves. In Elliott theory, the second wave must never drop below the beginning of the first wave. This is a fundamental rule, and if violated, the existing structure must be considered invalid. Therefore, at this stage, it is critically important for the price to remain above this key level. If the price completes its current correction and starts to move upward again, a large and strong third wave may be about to begin. Third waves are the most powerful and fastest rising waves in Elliott theory. They are typically the wave structures from which investors earn the most, as overall market sentiment turns positive and technical indicators become strongly supportive. If the price holds this critical point and forms a solid base here, the resulting movement could be not just a small rise, but the beginning of a much stronger and more sustainable trend. In such an upward movement, it is possible for the price to reach 1,618 to 272, or even 3,272 Fibonacci extension levels. This indicates the potential for a significant profit opportunity from the current position. By nature, second waves tend to test investor psychology and often lead many to sell out of impatience. This is because second waves pull the price down and negatively affect market sentiment. However, for investors who can stay calm and see the bigger picture, this stage offers tremendous opportunities. When the third wave begins, the price usually moves very quickly and aggressively, and catching this move can open the door to significant gains. The current correction we are experiencing can actually be considered a preparation phase for those who understand the bigger picture. The price, through minor pullbacks, is both shaking out weak hands from the market and building a stronger base for a solid rally. At this point, those who remain patient and stick to technical rules can benefit greatly once the third wave begins. In summary, we are currently sitting just above a critical threshold in our Elliott wave count. If the price manages to hold this support level, and the second wave is confirmed here, there is a strong possibility that an exceptionally powerful third wave will begin from a technical standpoint. However, if the price falls below the Elliott starting point, the entire current count will need to be scrapped and replaced with a new structure. That's why it is essential for the Elliott wave structure to remain intact. When we take a close look at the MACD indicator, the signal lines are currently positioned clearly below the zero level, and both lines are showing a distinct downward slope. This setup clearly indicates that the market momentum has remained in negative territory for a while and that prices have been under pressure. However, the key point here is that the MACD has already experienced a significant decline. In other words, we are currently in a phase where the indicator is approaching bottom levels. From a technical analysis perspective, oscillators like the MACD typically cannot stay in oversold regions for extended periods. When levels drop this low, it's usually followed by a slowdown in momentum and then an upward reversal. No indicator or price movement can continue in the same direction indefinitely, especially when it has reached such extreme levels. Therefore, the current state of the MACD, although it hasn't yet formed a bullish crossover, is starting to signal a potential bottoming process. At the moment, we can observe that the gap between the two lines has somewhat widened, but the momentum appears to be weakening. After such setups, we often see the MACD line crossing above the signal line and beginning to move toward the positive territory. As a result, being patient at this stage is of great importance. The MACD being below zero already reflects a negative sentiment in the market, but this negativity cannot last forever. Technical indicators also follow a natural cycle. Momentum-based indicators like the MACD are particularly effective at identifying when the price has reached psychologically oversold levels. The current appearance of the MACD suggests that selling pressure is gradually diminishing, and that buyers may soon step in to shift the balance upward. Of course, there is not yet a confirmed signal at this point, but the development of this formation significantly increases the likelihood of an upward crossover occurring in the near term. Especially after such extreme downward swings, the resulting upward crossovers often serve as signals for strong and sharp price increases. This means that a good opportunity may emerge for investors who patiently wait for this reversal. A bullish crossover in the MACD can also trigger a movement on the price chart that supports the start of a new trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.